Donald Trump has essentially been forced to say that he's going to give a $2,000 dividend to every qualifying American because his approval rating in the United States, as he's messing around with the rest of the world, trying to figure out how many tariffs to levy and how big they should be, it's down to about 40% on most polls. And he's had some choice words with the public about this. People are fools. We're now the richest and most respected country in the world. People are fools for rejecting tariffs. Record stock market price, 401ks are higher than ever. Trillions of dollars will soon begin paying down this enormous $37 trillion debt, as well, a national debt, as well as a dividend of at least $2,000 per person.
Investing in America, $20 trillion. No country's ever done anywhere even near that, like a fraction of that. Biden did less than $1 trillion in 4 years. I did 20 trillion. We're going to do over 17 trillion in 8 months. By the time we end, we could do over $20 trillion. There's never, in China, no matter where you go, there's never been anything like it. We are building up something that's unbelievable. And a big part of that are the tariffs, because they don't want to have to pay the tariffs because it's so unsustainable that they come and build the pharmaceuticals and the chips and all of the things. They're coming into the United States and they're building them. It's a miracle what's happening. We are building the greatest country in the world.
This $2,000 dividend that he had to throw out there seems like a very random, almost active desperation. A lot of what he says there, no context or evidence provided, how all these companies are coming back and building here. In my estimation, tariffs were mainly a foreign policy weapon, and now it's being justified as a savior for the United States. And as Scott Besson would say, it's national security.
Trump just constantly lies. It's it's pathological. I mean, obviously, pretty much all U.S. politicians lie. Democrats lie too. But in the case of Trump, it is just shocking. He has no relation to reality. It really shows that this idea that the strategy is just to repeat a lie so much until people believe that it's true. And everything that Trump said there in that tweet or that post on his website is completely false. It's all false. First of all, inflation is rising according to U.S. government data, official data. It's not falling. He said there's no inflation. He didn't even say that inflation is falling. He said there's no inflation, which is objectively false. It's crazy. Second of all, he says that all this money is coming in from tariffs and it's going to pay off the debt. The exact opposite is happening. Now, we can have a more complex discussion about the debt. I don't think the U.S. government debt is the end of the world. It's a nuanced discussion. But he's massively increasing the U.S. government debt, which he says he's not. It's false because, one, some revenue is coming in through the form of tariffs, which is a form of regressive taxation against working class Americans. They're the ones paying for those tariffs. Trump has constantly repeated that another lie, saying that other countries pay for tariffs. That is not true. It is a lie. U.S. importers pay the tariffs. And according to Goldman Sachs, the majority of the cost of those tariffs has come in the form of price increases, meaning that U.S. consumers, average working people, are paying for the majority of the cost of the tariffs, which means that money that the government is raising from tariffs is coming from consumers, from working class Americans. They're the ones paying the tariffs. Trump claims that money is going to pay off the debt, which is not true. And then he also says that money is going to be given back to Americans in the form of $2,000 checks. That's their money. That's tariff. That's taxes, taxes on consumption that Americans pay to the government through tariffs. China did not pay those taxes. So Trump is claiming he's going to give back some of that money in the form of these checks. But so is he going to give it back in the form of checks, or is he going to give it to pay off the debt? And within his own tweet, he's completely contradictory. You can't do both of those. Furthermore, Trump did not mention that his massive tax cuts on the rich and corporations have also massively increased the U.S. government deficit and therefore the U.S. government debt more than the increase in revenue from tariffs. So even if Trump does not give those checks, which we'll see, I mean, he's lied about a lot of things, so I'm skeptical about whether or not he'll give these checks out. But even if let's say he does not give these checks and all of that tariff revenue goes to trying to pay off the debt. It doesn't matter because the deficit and debt increase caused by Trump's tax cuts on the rich, the big beautiful bill, will be larger than the decrease in the debt caused by the tariff revenue. So Trump's lying about everything there. Another lie is this idea that the U.S. is reindustrializing. According to official U.S. government data, the U.S. is not reindustrializing. If you look at the ISM manufacturing index and if you look at manufacturing employment, both of them have been falling. So in terms of manufacturing employment, this year, ironically, in January and February, according to U.S. government data, there was a slight increase in manufacturing employment in the U.S. And then ever since Trump imposed his tariffs in April, manufacturing employment has fallen significantly in the U.S., which is because a lot of companies do not want to invest in the U.S., despite Trump's claims to the contrary, because there's so much uncertainty around tariffs. I've seen so many interviews with owners of companies who say, I'm not going to invest in the US because we don't know what the tariff rate will be next week, yet alone in 1 year. Making a factory, investing in all of this, fixed capital formation, this is complicated stuff. It takes many years. If a company decides it's going to make a factory, it could probably take 2 to 4 years. Trump will not even be president when the factory is open. This is what has happened, by the way, with TSMC. We were talking about the chip war. The Biden administration was offering billions of dollars in support and subsidies and tax breaks to TSMC, this company in Taiwan, which is part of China according to international law, but they're trying to bring it to the US. So they started making these factories in Arizona in the desert, and it was significantly delayed. It took them several years. There was a shortage of workers. They had major issues with infrastructure. So, I mean, Trump says that all this manufacturing is going to come back. It's objectively not happening. Trump claims that there could maybe be potentially $20 trillion, a number he just pulled out of his hat, out of nowhere. And Fox News just has on the president to just make up numbers with no pushback, of course, because Fox News is basically state media. And it's completely fake. It's a lie. All of the independent objective data shows the exact opposite is happening. Inflation is rising. Manufacturing jobs are falling. Manufacturing output is falling. The investment is not happening. Maybe there are guarantees made by foreign countries as part of these unequal treaties that Trump imposed on Japan and South Korea and Europe. And they said maybe that they'll invest in the US, but saying they'll do that is not the actual same thing as investing. Meanwhile, remember what happened with this South Korean car company in the US that was raided by ICE, this Hyundai plant?
Yep.
This is a huge issue in South Korea. It's a matter of national dignity with these South Korean workers, these engineers who were humiliated by ICE. And then the Trump administration tried to get them to stay. And I think it was only one South Korean worker who decided to stay. Everyone else wanted to leave after they were humiliated by ICE like that. So Trump's claims are completely false. The only thing he said, I'll give him credit. One thing he said is true. Yes, the stock market is at all-time highs. He didn't mention that it's because there's the biggest bubble in the history of the U.S. stock market right now, which is largely driven by the AI bubble. This is bigger than the dot-com bubble, which popped in 2000. It's bigger than the bubble that popped in 1929 that fueled the Great Depression. So Trump is right about that. But this is, always the case with the U.S. government. Its policies benefit Wall Street at the expense of Main Street, which is exactly what Trump has been doing, benefiting Wall Street at the expense of Main Street.
Ben, I mean, as you said, there's this major AI bubble. Even to this day, what the tariff war has done, it's still causing major investors to hesitate to do exactly what you said, to invest in the United States in terms of the Trump dump phenomenon, as major financiers are calling it. The head of AJ Bell said, we've seen a pickup in global funds that exclude the U.S. Lots of private investors will just buy global funds every month, and they will just go abroad to get exposure. And now we're seeing people are discovering these funds where you actually buy a global fund, but it doesn't include the US. So it means they're getting very broad exposure to different countries and deliberately excluding the United States. So, I mean, excluding the US came 3 times in a very short quotation there. That seems to be the phenomenon. And when you said earlier about the manufacturing, that, I mean, any ordinary person in the United States can look out their window, can ask anyone who's looking for jobs right now whether manufacturing is up. Most people are going to say, what does that even mean? None of the jobs are in manufacturing, and jobs are down in the United States. So not only the tariffs were supposed to be a foreign policy weapon, and they failed terribly, especially vis-a-vis China. Now they're also failing and blowing back really hard in the United States. And we're getting close to midterm elections. Your thoughts?
Yeah. What has happened in the US is not necessarily new, but it's become so stark that there are two different economies. Some people call this the K-shaped economy. It's become a popular term in the financial press. So it's like a K, like if you look at a chart, like it goes up for the rich people and down for everyone else. And now in the US, 50% of all consumption is carried out by the richest 10% of the population. And spending by the richest 10% of the population makes up 1/3 of GDP, according to Moody's Analytics. This was reported in the Wall Street Journal. 1/3 of GDP. So much depends on continuing to inflate this bubble in the stock market. Now, 90% of stocks in the US are owned by the richest 10% of the population. 90%. So if you look at the bottom 50% of the US population, they only own a little over 1% of stocks. 1% owned by 50%, 90% owned by the richest 10%. So it's clear that this bubble benefits the rich, and that the US government's policies are geared toward continuing to inflate these asset bubbles, including the stock bubble, including the real estate bubble, which is Trump's crazy policy of his proposal of a 50-year mortgage, which we can talk about, which is an insane policy that would actually benefit banks and lenders at the expense of average American families, who would have to spend more than twice as much in interest compared to a 30-year mortgage, and they would be in debt until they die. This is not a pro-working class policy. It's a pro-Wall Street policy. So in terms of the de-risking idea, now there are a few reasons for this. One, what we've seen this year, 2025, is the most volatility in the US dollar in many decades, especially in the first several months, in particular following the declaration of a global trade war in April. The dollar fell by 10% against other major currencies. Now, if you're holding most of your portfolio in US dollar assets and you're not in the US and you don't have liabilities in dollars, like if you're a pension fund or whatever, if you are a foreign, even like some kind of foreign, money market fund, or you're a foreign asset manager, like in Europe, for instance, and your liabilities, let's say you're a European pension fund and you have to pay, you're invested largely in these kind of fixed income assets and maybe like some exposure to US stocks, and you have to pay, pensions out every month to these retirees in euro, and yet you invested in US stocks and US bonds. Even if the US stock and bond market have not fallen significantly, but the dollar falls 10% against the euro. In fact, it actually fell more against the euro because it fell 10% against other major currencies, but against the euro, it actually fell even more. Let's say it fell 15% against the euro. That means that even if you are making money on your investments in US stocks and US bonds, you're actually still probably losing money unless those returns are over 20%, which they're not, especially bonds. You're maybe getting 4% per year. So this means that a lot of countries, investors in foreign countries, are saying just out of the currency exposure risk, they're de-risking out of US dollar assets. Not 100%, and certainly not out of the stock market, because they can also see this massive bubble in the stock market that they've invested in, although a lot of them are getting a bit worried about that as well. So the first risk is the currency exposure risk. The second risk is the stock market risk. I mentioned how the US stock market is in the biggest bubble ever, and you have these insane evaluations of these big tech companies. So these stock prices are very bubbly, and a lot of foreign investors are saying this is too risky. There could be a very serious fall or even potentially collapse, some kind of big correction in the stock price. So they're de-risking because it's too expensive. And then add in the third risk, which is the Trump effect and the fact that Trump could wake up tomorrow and announce some new crazy policy that could, again, cause the dollar to fall a bunch, that could collapse the stock market. Who even knows, like whatever Trump announces next. So there are a variety of reasons why these foreign investors are de-risking. And we're talking about people who are only concerned about making money in Western countries. This isn't even to mention the geopolitical risk. If you are in China or India now, which is facing 50% tariffs, or yet alone Russia or, BRICS countries that are afraid they could be the next country to be sanctioned by the US, their de-risking is even greater because they're concerned, especially looking at China. China has a massive trade surplus. They have so many excess dollars. Previously, a lot of those dollars went into buying U.S. government debt, U.S. Treasury securities, which was helping to sustain the U.S. Treasury market, which allowed the U.S. government to borrow cheaply and continue to have larger and larger debts. So China now, state investors and private investors are saying, wow, well, we shouldn't buy any U.S. assets because tomorrow the U.S. government could decide to seize all of our assets like they did to Russia. So there are just so many layers of risk that it's just not worth putting all of your eggs in the U.S. basket, which, if you look at the U.S. empire, one of the most powerful weapons it has is the dollar system. The U.S. military is still pretty powerful, but we've seen that in Ukraine in the proxy war, the U.S. military-industrial complex has not been able to defeat Russia in this proxy war, flooding Ukraine with weapons produced by almost entirely U.S. military contractors. These for-profit corporations in the military-industrial complex, they have not been able to defeat Russia. So yeah, the U.S. military is powerful but has its limits. But the biggest strength the U.S. empire has is the dollar system and the fact that the U.S. in the global economy plays this role as the kind of global banker. So capitalists around the world, they used to store much of their wealth in the form of U.S. assets and U.S. stocks and U.S. bonds, U.S. real estate, which helped to also inflate the real estate bubble in the U.S. in places like New York City. Foreign oligarchs just buying up empty apartments and just sit there. But it's a way of just, turning whatever your local currency is, converting those into dollars, and then buying a luxurious condo in New York City or Florida or whatever. So increasingly, a lot of those people, these oligarchs and foreign capitalists, even they are reconsidering that because for a variety of reasons, U.S. investments are no longer as attractive as they have been in the past. This is a huge shift. And over time, I'm not saying this will happen overnight, but this will continue to erode the power of the U.S. empire that it has, its chokehold on the international financial system as the dollar weakens. It's not going to disappear overnight, but what we're seeing is a more multipolar financial order in which the dollar is no longer the only game in town, and many international financial institutions are de-risking from the U.S. in general.
Trump's administration has very blatantly combined the economic war, the policies of economic war around tariffs, export bans, etc., the tech war, all of it, with national security very openly. And here's Scott Bessent articulating this.
News come in at the beginning, then as we rebalance, which is the goal of this, bring back high-paid manufacturing jobs to the U.S., then it will then morph into domestic tax revenues. President Trump has consistently fought for the American worker, and we are seeing trillions of investments in the U.S. that would not have occurred without the tariffs. The other thing, too, is the authority that he uses is called IEPA. It is an emergency authority, and he used that emergency authority. He got the Chinese to the table to negotiate on stopping the precursors for fentanyl drugs. If fentanyl hundreds of thousands of Americans dying every year is not an emergency. What is? On October 8th, Chinese threatened to put export controls on rare earth materials. He was able to threaten 100% tariffs, and we were able to negotiate that away. And then finally, in terms of the general tariffs, we are doing these trade deals that would not be possible. We were at a tipping point in terms of the economy, in terms of our trade balance, and we are rebalancing successfully.
The threat, China, fentanyl, rebalance. It's all about the security of the United States, and none of that seemed to be true, though, Ben. Everything he said there seemed to be just another rehash of everything you've been debunking here.
It's very funny hearing that, because basically the thrust of what Besson is arguing is that the U.S. made all of these gains by waging this trade war against China. What he doesn't mention is that all of those so-called gains were basically bringing us back to square one before Trump started this new phase of the trade war in China. So for instance, okay, Besson claims, one, China is restricting the export of materials that could be used to make fentanyl. Okay, China was already agreeing to do that. China was obviously not encouraging the precursor chemicals used to make fentanyl. China was already playing ball with the U.S. on that. This is part of this myth that, like, you hear from these insane hawks in the U.S. claiming that, like, China wants the U.S. fentanyl crisis, opioid crisis, to get worse. Completely false. So that's not really a gain in any way. China is saying that it's going to do something that it was already doing. Trump constantly does this, where he moves the goalposts and he says he gained a victory because another country reaffirmed something that it was already doing. Trump has done this with Mexico many times. Trump threatens Mexico, and then President Claudia Sheinbaum says, okay, we're going to restrict fentanyl, which they're already doing, and then Trump says victory. But they were already doing that. Okay, so that's not really a victory. Then Besson says that China also had threatened the restrictions on the export of rare earths to the U.S. But why did China do that? Besson doesn't mention that. He acts as though China was just being aggressive and just woke up one day and President Xi decided to restrict the export of rare earths to the U.S. The reason China did that is because it was a retaliation against the unilateral trade war waged by the U.S. This was China's way of defending itself against the U.S. trade war. So Trump massively raised tariffs on China. And then what did China do? They raised tariffs to the same amount. Then Trump announced several forms of export restrictions and added Chinese companies to the entity list, which is a form of sanctions. And China responded with the rare earth restrictions. So then when the Trump administration agreed to go back to where it was at square one and to reduce those tariffs and to take those Chinese companies off of the entity list, like the parent company of Nexperia, what did China do? It announced it would no longer restrict the export of rare earths. So we are literally back to where everything was when we started, before Trump escalated this trade war in China. He did not win anything. But Besson is trying to portray what China did as concessions, not mentioning that China also reverted back to where things were beforehand. I mean, it's just like, for average people who don't follow these issues closely, I can understand why this would be convincing, because people hear that and they say, oh, well, that makes sense. China made all those concessions. But that's because Trump and Besson don't mention that those so-called concessions were actually, you did something in response to the U.S. attacks. The U.S. ended its attacks, so you took back the action you did in self-defense. One other thing that Besson says there, he says the economy is booming and there's going to be all these investments. It's objectively not true. In fact, there's this chart that's been going around finance Twitter, which is very revealing, and it shows that in the U.S., 80% of Americans are living in parts of the economy that are in recession. 80%. So I've been talking here a lot about the AI bubble and the stock market bubble. That is really the only thing keeping the U.S. economy afloat, because the way GDP is measured, it's aggregate, right? it's GDP for the entire US economy, for all 50 states. But in many US states, the local economy is in recession. In fact, the Financial Times reported that about 1/3 of US states are in recession or close to recession. So yes, the AI boom is leading to a boom in places like California, where Silicon Valley is, or Texas, where they're building a lot of these data centers. But if you're like in the Rust Belt, if you're in Ohio, you're probably living in recession. So the Trump administration talks about how great the economy is supposedly doing. But once again, the rich are doing great. If you own stocks, you're doing great. That's why 50% of consumption in the US, of that spending, comes from the richest 10% of the population. But the vast majority of working class Americans are not doing great.